Hey guys, I just want to dedicate this episode on what I believe to be the 10 most imminent actions that's going to come out from this election, particularly within the realm of digital assets and particularly Bitcoin, which is really what this really is ultimately about in terms of preserving one's generational wealth. So the first point is fairly clear that given President Trump's win, we're entering a new phenomenon on moving that hostility that was once there, not just in the US government, it's fair to say many other governments, particularly Western governments, not so much in emerging markets, because in other podcasts that I've released in my channel is the opposite trend. And I think the West have a tremendous path of catching up with what the emerging markets are doing. Take the example of BRICS, where they're building this tremendous Bitcoin mining facility across the region headed by Russia, and also AI infrastructure, something that the West kind of lacks, even though, the wind is going to change, certainly this win from Trump. So the first point is focusing on that. We're going to be entering a realm of innovation, digital assets, clarity around regulations, frameworks, things about how to give transparency for citizens to custody their own Bitcoins or crypto assets without too much intervention from the state. So that is really what the first point is really about. That's going to come in. Second point is around banks. There is always a handful of pillars in terms of milestone achievements to fully adopting Bitcoin into the mainstream. If you recall, we have the ETFs, that's clear. We also have the fair value accounting rule, which is going to come into effect for all US publicly registered companies in January 2025 next year. And what that means, fair value account, very, very quickly, it's about recognizing the ups and downs in value of digital assets when it comes to accounting recognition of those digital assets into the corporate balance sheets. Because historically, whenever there was a gain from a digital asset from a corporate standpoint, they weren't in a position to acknowledge that gain from an accounting perspective in their corporate books. But with this fair value account, that's going to change that. So we have that already. We also have Bitcoin options. We talked about them extensively in my other podcasts. But really the bank's custody and trading of Bitcoins for their clients, this has always been a sticking point. The last hurdle in terms of massively adopting Bitcoin into the mainstream. So this is going to happen. In fact, there is already a digital bank in Brazil that's called Nubank. That's been the first bank in the world where they've actually fully adopted Bitcoin to its clients and even custody of their private keys. And this is going to happen, right? We've got other US banks starting to receive separate approvals to custody the Bitcoins. But given Trump coming into the space and him being a more pro-crypto, pro-digital asset, pro-Bitcoiner, no, this is going to happen fairly shortly. The third point is around Gary Gensler. As you know, he's the current SEC chair. He's going to be sent out packing. And what will this mean is, as I said earlier on, this is going to bring a new wave of innovation. There's going to be someone taking over his place who's going to be more pro-innovation, pro-MAGA, make America great again. Think of the interest of the United States in terms of leading and spearheading once and for all the innovation around crypto industry, digital assets, Bitcoin, DeFi, decentralized finance. So this is like how we can digitize digital financial system in terms of its core banking services on the blockchain in a decentralized finance fashion. And the second use case for the blockchain technology is real world assets, tokenization. These projects are going to be coming on to the fold and into the mainstream, as I said, at a gradual pace, as and when there is clarity around crypto industry regulation in the country and other places elsewhere, right? And Bitcoin has a tremendous opportunity to take center stage of this innovation. So that's the third point. The fourth point, as we recall, there's been some awful policy discussions or pledges from Harris during the campaign around unrealized gain tax. Now that is dead in the water, thank God, right? And also Trump during his campaign, he made several pledges, but one of which is around lowering the tax regime for corporates and citizens. This would inevitably lead some great news for Bitcoiners in terms of making new Bitcoin investments into their portfolios. This leads to the fifth point. We all know that we've already begun the era of cheap money, where central banks have already started on their train journey on cutting their rates. And funny enough, today, we're November 7th, both the Fed and the Bank of England are going to be having their Monetary Policy Committee meetings, or the FOMC in the case of the US Fed, around their expectation on reducing another rate cut for November. I expect 25 basis points in reality. And then, of course, this leads to the final calendar year meeting of December for both the Fed and Bank of England to make another similar rate cut before we see the year out of this year. So whenever there is this rate cuts, we all know this is a golden opportunity to invest intelligently in the leading hard assets out there. And we all know that, okay, there may be some AI equities and stocks that are quite interesting to have. I'm not saying you should invest in those, but I think you should, raise your eyebrows and consider Bitcoin as the leading digital hard asset against debasement, against inflation. It's the ultimate investment to preserve one's wealth and to even accrete in value over time. This is the whole point of Bitcoin. So use the money intelligently during this cheap money era, as we are seeing more and more of these central banks rate cuts, to invest in those leading assets. The sixth point is quite important because I think the only country where they've launched in-kind ETFs, I think, has been Hong Kong. So what this means is it gives investors the opportunity to swap their assets, crypto assets, in this case Bitcoin, for the ETF directly without selling off the Bitcoins in order to reinvest their fiat into those ETFs without incurring any tax or tax levies. This is what in-kind ETFs is about. I think Hong Kong have done this successfully, and I think the US are going to be expecting to replicate this in-kind ETFs for the US ETFs. So this is going to be coming soon, and again, this will bring an even more wave of liquidity into those ETFs, particularly for Bitcoin, anytime soon. The seventh point is, you recall, Trump made a few pledges at the last Bitcoin National Conference. He's going to make Bitcoin as a strategic reserve asset for the US Treasury. And what would that mean is he's going to be holding on to Bitcoin in the national US Treasury and not selling Bitcoin at all. He's going to be accumulating Bitcoin as much as he can. And maybe the only instance or exception to that rule would be paying off part of the multi-trillion-dollar debt. Because it makes sense, right? When you hold a Bitcoin asset into one's treasury, if you hold it into the long term, mid to long term, it's going to most certainly accrete significantly in value, in price. So it would make sense at that point, instead of raising taxes to its citizens to finance, to pay off the debt, particularly interest payments of those debt, it would make sense to relinquish some of the Bitcoins held in the National Reserve to pay off part of the debt, the $37 trillion debt that they currently have in the country, which is humongous, right? That would make sense. I would see that as the only exception to the rule. But overall, I think Trump is going to clearly fulfill his pledge on this point number 7. That's going to come shortly. And of course, once you have the US leading this publicly, there's going to be other nations going to be following suit quite rapidly. This leads to point number 8. Individual states to have Bitcoin reserves. That leads on to the previous point 7. And of course, the other pension funds, whether it's public or private pension funds, we've already been seeing tremendous amount of allocations into the public pension funds, particularly those state pension funds in the US. I expect that to roll out for the remainder of the 50 states in the country, and other countries will certainly eye on this wonderful initiative to replicate for their public state pension funds in their countries and sovereign states as well. So whatever the US conducts, the repercussion of these actions will certainly have an impact in the rest of the world, right? And that's clear. That is a given. So that's point number 8. Point number 9, we're going to be seeing public and private companies to certainly ramp up and increase the speed of which to adopt the MicroStrategy playbook, which is to acquire as many of the Bitcoins onto their corporate balance sheets, i.e. adopt the Bitcoin standard that MicroStrategy have set out. We've currently got around 100 companies who've already made some disclosures of their acquisition of Bitcoin on their balance sheets, and that's going to ramp up quite significantly. And then lastly, point number 10, we've already begun seeing this. Morgan Stanley has already instructed their financial advisors to start allocating or advising their clients to allocate minimum 3 to 5% of their portfolios into Bitcoin. This is going to increase the speed of which these financial advisors will, across the board, the wirehouses, the banks, the Merrill Lynches, the Bank of America, and also other parts of the world, they're going to follow suit. They're going to start asking their financial advisors now to really pick up speed and encourage their clients to start making these allocations of 3 to 5% to begin with into Bitcoin, and then into medium to long term, this percentage of allocation to Bitcoin in their portfolios is going to increase over time. So overall, these are the 10 points where I would think would happen in the short to medium term following the conclusion of this US presidential election, of which Trump is a resounding winner. And as I said before, I wouldn't be surprised that these points are going to be replicated in some shape or form in the other nation states in the rest of the world. And my message remains the same. You need to continue to stack those sats into your portfolio in line with your risk appetite, and to hodl them, sit on it for the long term. Minimum 10 years would be my recommendation. And continue to dollar cost average, pound cost average, euro cost average, yen cost average, as and when you have extra surplus cash, fiat money, to do that. So I hope you enjoyed this episode. If you have, please don't forget to like, subscribe, and share this video. So I'll see you next time.